And here's the last of the homework assignments for homework 3, part 4 here. But this one's going to focus mostly on closing entries you'll see in a moment. Right, so it begins with, we're at the end of the period here in Halcyon's retained earnings, dividend, and income summary accounts have the following balances and activities. So what you're doing here is interpreting some basic information based upon what you're staring at here. So the first thing I ask for A is whether they had a net income or a loss for the period. Again, there's more than one way to determine this from what you're looking at here, but the primary thing to look at is this right here. You see an increase in retained earnings of $365,000. Guess what? The only thing that can increase your retained earnings is a net income. So that's why you know they have a net income, because you see it increase by $365,000. So that's the short, quick answer. Now, adjacent to that is the answer to B, is what are revenues and expenses. Now, if you focus on this income summary account, remember that's what you're doing is summarizing the accounts that went into the definition of net income or net loss for the period. So this is just, again, a summary T account of what happened when they were doing their closing entries. So remember, this first credit should always be interpreted as what? Based on what I've said in that video, that should be interpreted as total. So TOT, total revenues, right? So it's the total of all your revenue balances. Ooh, that got really out of hand. Trust me, it says revenues, or REV at least. So that's total revenues, and this over here is total. So I'll just abbreviate it TOT. This might go a little bit better. EXP. There we go. Total expenses. So you know what your revenues and expenses are, and of course, revenues are clearly greater than expenses. So therefore, that means you had a net income. Now, what you're observing here with this number, and as it offsets with that one, is how to get rid of the balance in income summary. In other words, it has a $365,000 net credit balance, so they had to debit it $365,000, and the offsetting credit is to where? Retained earnings, in order to make it a zero. That's what you're looking at there. In other words, to close it out. And again, there's more than one way to determine whether you're dealing with a net income or net loss in this example. Right. This is C. I don't believe I have a letter on there, but trust me, that's what it is. It's just all I asked for in C was for you to take the like all the information that you've seen here and just give me the 4 basic closing entries. Now, because I didn't give you individual revenue accounts or individual expense accounts, I just asked you to just plug in generically the word revenues and expenses for that. So in other words, actually what you'll note is I'm giving you, of like the total of like 8 lines that I'm asking for, I'm giving you 6 of them, right? I'm giving you 6 total. In other words, we close first what? All of our revenues. So again, normally this wouldn't just be an account generically called revenues, like you see here. It would be all of the various revenue accounts, like fees earned and interest revenue and so on. Whatever you have would all be debited, and then income summary would be credited for this one lump sum. Again, that's what you're observing here, is the transference of all of your revenues to income summary. And the second half here would be, of course, the transference of all expenses to income summary. And of course, instead of just saying expenses, it would be, wages expense, repairs expense, supplies expense, and so on. All those individual expense accounts would in total be credited for $1,185,000. But again, that total transference amount, there it is. So that's just the other half of those two journal entries, representing again, a summary form of the closing entries. And as for the last 2, you have the whole entry in this case, which is, okay, so in other words, we have a $365,000 net credit balance in there. And again, that's based upon what? Taking these 2 numbers and netting it. If you net those 2 numbers, what do you get? Well, this side's larger, clearly, so that's 365 on the credit side. So again, to get rid of it, you have to do what? You have to debit income summary 365, right? That's what you're looking at here and there as well. And the offsetting credit is to retain earnings. That's the other half there. Now, what else do we have to do? We have to get rid of the balance in dividends by transferring it to retain earnings. So that's all you're looking at here. So the balance in dividends was a net debit balance of 83. So we have to credit that balance out of there and then transfer it as a debit, a reduction in retained earnings. And that's all you're observing here. Just moving that 83 to retain earnings by debiting it there and then crediting it there. So in other words, after you've done all these 4 entries here, all you're left with is what? Balance sheet accounts. right? There's nothing that would go on the income statement or the statement of retained earnings. In other words, that dividend account, all those nominal accounts are all zeros now. And then for D, I asked you to just prepare a statement of retained earnings. Well, the good thing is you already have it. It's right here. This account is all the components. I'm just asking you to put it in a more formal, form. Sounds a little redundant, but that's the idea here. In other words, just take whatever you're looking at here and give me what the formal statement would look like. In other words, interpret each of these numbers. So this first 180 is going to be what? That's going to be your beginning retained earnings balance. Next up, we had what? We added 365 for net income, subtracted 83,000 for dividends. So that's how you're observing here. Net income less dividends, 365 minus 83 equals a change, an increase in this case because it's a positive, $282,000, resulted in the ending balance of, whoops, went the wrong way there, of 462. So you knew what the answer was going to be here. It's just putting it in a more, common form. I say retained earnings statement here, statement of retained earnings, those are fairly interchangeable, just so you understand. So just asking you to just take that basic T account information and just put it into a formal financial statement form. All right, lastly, and again, that was D, check that one off the list. And then lastly, E, they pay dividends of 83. Again, question is, are they compelled to pay dividends to shareholders? And of course, the short and quick answer here is of course not. They're not compelled by law to pay dividends. All dividends are paid at the discretion of the board of directors. Again, that's one of the limitations of the corporate form of business, is because the board of directors has that control. It's not because, like, if you're a sole proprietor or a partner, you can take your money out of your capital account whenever you feel like. Why? Because you're already paying tax on it. So therefore, it's at your disposal whenever you want to remove it. That's not true for whatever's happening in the corporation, because again, you only get taxed on dividends when they're paid. So therefore, your lack of control means you don't have to pay any tax personally on them. And meanwhile, the corporation has to pay tax on their income. But again, the dividends are only taxed to you when you actually receive them. Excuse me. All right, and that concludes the homework 3 set. And again, the main thing to focus on here, obviously, is adjusting entries, because that's where most of your time and energy is going to go into. But of course, the other thing to get out of this one was the closing entries, and understanding how to interpret these T accounts here is important. Hint, hint, because again, you will see something like this on the first exam. You'll see something like this, where you'll be given this form here. So just remember, basically, whatever I talked about in this video will give you the ability to be able to analyze it. Now, of course, the good news is, again, all your tests will be open book, all 2 of them. There's not a lot in here. There'll be open book, open note, or mostly open note is really in here, as you've probably since discovered, because really book in this class only in the fundamental sense. So you have access to those notes, and then it also includes homework assignments as well for reference for the exams. All right, so that concludes the last part of the 3rd homework set. So I'll see you in the 4th homework set whenever you get a chance to get to that one. Bye for now.